This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set for gains as chip maker Micron soars on a strong outlook, reigniting confidence in the AI trade. Oil erasing its Iran war gains, easing inflation fears ahead of key U.S. data. On top of Micron's blowout forecast, Qualcomm's also predicting billions more in AI chip sales, while SK Hynix seeks $29 billion in a U.S. listing. Also ahead, Anthropic accusing China's Alibaba of illicitly accessing its Claude AI model using thousands of fraudulent accounts. And we speak to Canada's defense minister about plans to deepen military ties in Asia while managing relations with China.
I'm Haidi, Stroud-Watts in Sydney. Take a look at the setup for trading across Asia as we do expect to see that boost when it comes to AI and tech-related names, given the jump that we saw as a result of Micron's strong forecast. We had US share futures gaining after Micron really released that upbeat outlook, reigniting confidence in the AI trade. That late rally that we saw on Wall Street is likely to pass through to Asia, particularly when it comes to South Korea. The big question, whether those earnings, the surprise to the upside, the post-market boost will be enough to kind of erase some of the doldrums that we've seen these markets fall in, particularly when it comes to the Kospi. Micron shares in the Kospi actually retreated in tandem on Tuesday. We did manage to see an eventual gain for the Korean benchmark, but looking at that correlation again, possibly to the upside. We do have Nikkei futures trading higher by 2.5% in Chicago. Kospi futures looking at that pop of 5.6%. US futures are also surging at the moment. Dollar yen not doing very much, still in that high 161 level. Of course, we've been on sort of yen intervention watch for quite some time. Switch out the board to take a look at the geopolitical kind of implications as we continue to watch that oil price holding lower. New York traded crude about 0.7%, really extending the drop across the energy space to close, raising now the wartime price gains on sides that supply is starting to lift again. Progress is being made on the US-Iran peace deal, even as we continue to get conflicting takes on from each side, I should say. We're actually starting to see some markets of the oil, some parts of the oil market, I should say, suddenly pretty flush with supply as we see that oil returning from the Middle East, other regions such as West Africa as well. So that rising availability story is what's driving crude markets. But let's get back to our top market story, of course, looking at Micron shares soaring in the late trade. It forecasts revenue of around $50 billion this quarter, shattering the average Wall Street estimate of about $43 billion. It's a signal that investors had been waiting for, that the AI-fueled growth story remains strong. Let's get more from Bloomberg Intelligence US semiconductor analyst Jake Silverman, also our markets reporter Anthony Stevens. So Jake, let me kick it off with you. In terms of these numbers, what was so impressive to investors? And I guess we're really looking at the longevity of this story, right, rather than a short-term drive higher for sentiment after what has been a pretty challenging time for this segment.
Yeah, I think the key thing to take away from the call is that they are now signing these longer-term contracts that have floor pricing, but also add the optionality of higher pricing in the future. And they've only signed, I think about 25% of their overall bits just going out 5 years. We expect a lot more of their revenue over the next several years to get signed to these long-term contracts. And also gives us investors a good idea of what the floor pricing is. I think that when you just look at the actual beat and raise from Micron, that was very important, but not as important as these contracts.
It's interesting, the CEO saying that there's no line of sight when it comes to when supply will catch up with demand. What do you take away from that in terms of the forward guidance and the optimism there?
Yeah, I mean, that just underlines the supply and demand imbalance right now. So the entire industry is capacity constrained. Micron highlighted that they're trying to increase the capacity at their Tongluo facility, as well as their new Idaho facilities that are supposed to start kicking in 2027 and 2028. But there's just not nearly enough supply that's going to come online between now and we think at least through the end of 2028, they can offset this demand that we're seeing, which is really primarily driven by, the vast majority of it's driven by AI. And you also have additional demand for high bandwidth memory that reduces capacity for standard DRAM. And you're also seeing that effect on NAND as well, with AI inferencing really inflecting. So, I think what the CEO is really saying is, despite their best efforts, they're just not going to be able to meet the amount of supply needed by the market.
We also did see that optimism being contributed to from Qualcomm's numbers as well.
Yeah, no, I mean, look, for Qualcomm, they're entering a brand new market for them, which is the data center. It really, the key is that it expands their addressable market. And the fact that they had Meta and Microsoft willing to adopt their products really shows that they are making some progress. And certainly that increases competition around the entire market for those developing GPUs and developing XPUs as well. So it keeps everyone on their toes. And for Qualcomm, since they've lost a big chunk of what was their main or core business over the last several decades, it's really important to be able to replace that revenue growth within a market that could be up to $1 trillion over the next several years.
Bloomberg Intelligence U.S. semiconductor analyst Jake Silverman there as we continue to see the renewed optimism around the AI trade. U.S. stocks futures now surging. Of course, we had Micron's results. We have still comments coming from Qualcomm. Let's get to Anthony now. Anthony, so was the sell-off that we saw in tech more about then positioning, perhaps rotation, instead of anything fundamentally wrong in this sector?
Yeah, there were some fundamental concerns, to be honest, in terms of how much visibility there was going to be on the memory trade going forward. The fact that Micron would come in with very strong results was not in doubt, but they shattered those very high expectations anyway. And the focus for Asia will be on the margins. An 85% margin is just an insanely high number. And that speaks to the shortages that Jake was talking about. And the Korean read-through is very strong. It's almost to the extent of this result becoming a macro trade. And we're starting to see something like that fold into the Korean macro numbers as manufacturing optimism continues to pick up. Very strong leads for Korea into today. It's showing up 5% on the Kospi. The Kospi futures got a late look at those results and ran with it. Taiwan futures also looking very strong. And as you alluded to, in terms of the volatility and the flow yesterday, we did see a little bit of panic. We saw foreign investors sell about $9 billion between Korea and Taiwan yesterday, almost 9% of the entire year's total. So there was a little bit of panic there. Korean volatility was at a 90 handle, indicating a 5.5% daily move from here. So that's quite ironic that we're going to see a 5.5% move on the upside now. But the volatility and the foreign outflow will have to abate for people to be a little bit more relaxed about Asian tech. But between Micron and Qualcomm, the picture is just very rosy to start the day.
The South Korea market, the volatility that you talk about, no wonder we are seeing authorities being more careful. They have even delayed their weekly one single stock options. What are the expectations now that you have the likes of these trillion-dollar companies like SK Hynix wanting to list in the U.S.?
I think this speaks to the fact that the Korean microstructure at the moment cannot handle the volatility and volumes and just sheer level of speculation in the semi space in its current form. So the Korean equity market is still in a process of reform. Domestic retail is very aggressive in the kind of products they want to trade. So the government has to kind of put the speed brakes on a little bit so that people don't get too ahead of themselves. So now Hynix ADRs are probably a really good idea. This is the biggest ADR listing since Alibaba. And the US market is extremely liquid, it's extremely well developed, and it can handle this flow without causing any kind of disruption. And this meets the demand for capital these Asian semiconductor makers are facing, to continue to grow out this capacity. So that's a good compromise. Now, in terms of the 1 week options, that's a very aggressive product. The US and India have had it for a long time, very short-dated options, but that requires quite a complex amount of market microstructure building. And I think the Korean regulators have taken the view that let's not sprint before we can walk as far as this rally is concerned.
I mean, when it comes to disruption, how disruptive do you expect the PCE numbers out of the U.S. when it comes to the macro moves that we're seeing right now, especially with oil now trending back below the pre-war prices? Could we see a little bit of a more muted reaction than perhaps what would have been if the Iran war continued and inflation fears continued from here?
Yeah, so this speaks to the central debate around inflation, and Wash is going to be right on top of it, right? Whether we're talking about the core numbers of inflation that are going to be driven by U.S. economic growth or this transitory impact of commodity price inflection points, right? So how quickly or how slowly those second-order inflation impacts from the Iran war have fed into the U.S. PCE will be super interesting. In terms of the asset impact, any non-AI trade will be challenged by a strong dollar. So we saw stuff like Bitcoin, Ethereum, gold, silver get smacked overnight, and those assets and holders of those assets will be watching very keenly this PCE number to see if this U.S. economic growth that is starting in the AI space has really hardened into long-term inflation expectations.
Bloomberg Markets reporter Anthony Stevens there with a look ahead to the market. Still to come, more on Micron's blowout forecast and the outlook for Korean and Chinese chip makers in the AI trade. Susquehanna's Mehdi Hosseini joins us next. This is Bloomberg.
Take a look at, obviously, the only story that's going to be driving the Asian trading session, particularly when it comes to these tech-heavy markets like Korea, also in Japan and Taiwan, looking like we'll see a pop at the open as well. This is the story. Micron Technology still up by 15%, surging in that late part of the session after quarterly sales forecasts exceeding Wall Street estimates. It really kind of gives that signal that AI-fueled growth, that run that we've seen in equity markets remains pretty strong. They've secured strategic customer agreements with an average of 3 years in length, and that's been really key as a suggestion that it can mitigate that boom-bust cycle in the memory chip industry that remains such a risk. We also saw Qualcomm as well coming through with a pretty strong report there, rising more than 10%, and in fact at this point 12% higher after the Micron report. But at the Investor Day, we also heard a number of positive comments from Qualcomm about its growth prospects from AI as well, particularly when it comes to the expansion into chips for data centers to produce, quote, billions in revenue in the fiscal year kicking off in October. Some of those other names that we're watching seeing double-digit gains, Western Digital, SanDisk Corporation as well. Let's bring in Mehdi Hosseini, who's a senior equity research analyst at Susquehanna. Mehdi, really great to have you with us. So we're clearly seeing that exuberance and that correlation when it comes to the Kospi, and Micron will likely trade higher today as well in a pretty major way. Does this erase the fundamental, more existential worries over the sustainability of this growth story?
Thanks for having me on the program. I think this volatility that you see into earnings is going to remain with us. Just to put things in perspective, given the after-hour trading and how Korea is going to open, we're basically flat on a week-over-week basis. A couple of takeaways from Micron earnings, just to get back to your question, I think is the free cash flow and their ability to step up and start a more aggressive buyback was one of the key surprises or takeaway. The other takeaway is consensus for the August quarter was around $25 EPS. Buy-side expectation was for 30, and they guided to 31. So they continue to beat and raise and generating a lot of free cash flow. And later this year, when the handcuffs are off, they're going to be more aggressive with the buyback.
These multi-year contracts, how much does this really serve to kind of alleviate concerns over short-term boom-bust in this cycle?
Not much. We have been expecting these longer-term contracts. Unlike other parts of the supply chain, you're not going to see Micron's customers like NVIDIA, AMD, and others to make a big announcement. But they are securing capacity. They are putting down cash to secure the capacity. We have known this, and I don't think there was anything specific about these longer-term contracts from the conference call that would make any difference. I think the anxiety, which has been going on for more than a year, has to do with the AI and not knowing how to forecast incremental demand from AI, especially for memory. Memory is a key bottleneck for AI, more of a bottleneck than GPUs. And I think it's going to take us some time to endorse that. In the meantime, we also have to be comfortable with the normalized margin profile is going to be. But the fact that the free cash flows are growing dramatically and the company is going to step up and buy back is going to add to incremental confidence. The noise, I think, is going to be with us for quite some time.
The fact that adjusted gross margins are at around 85%, does that signal a significant structural shift when it comes to the memory space?
Not entirely. We have to test the margin profile over the entire cycle. Obviously, these are unprecedented margin profile, is much higher than what TSMC is able to deliver, is much higher than what Micron customers are able to deliver. So, but what if we have an air pocket, not next quarter, not next year, maybe by early 2028, we will have an air pocket. Then we will examine how the margins will look like throughout the cycle and what's the downside risk. If they're able to minimize the downside to, especially on an operating margin, I think we're going to be more convinced that it's structurally different. Unfortunately, I think questioning the structural margin profile is going to be a question that is going to be with us for quite some time. We have to go through the cycle to fully endorse it.
Mehdi, of course, we are very much expecting the SK Hynix U.S. listing as well, highly anticipated. Now that you have Micron also selling to NVIDIA when it comes to HBM4 chips for their Vera Rubins, how does that reshape the competition right now?
I think some of the recent confusion or noise is around the HBM market share. Earlier this year, we highlighted the fact that SK Hynix market share, when we migrate to HBM4, may downtick. They have dominated HBM, but as Samsung becomes stronger and becomes effective with their manufacturing, they're going to grab some market share. And I think that's going to adversely impact SK Hynix more than Micron. So this is something that I don't think is well understood, and some of the recent noise has more to do with SK Hynix and a market share with HBM4. As to the ADR, this is great. I think this underscores the fact that the supply chain is global. SK Hynix and Samsung are brands that want to be better understood in the U.S. market and also better recognized with the customers. I think is all good, constructive, but I think both companies are going to have to go through a better understanding of the U.S. market, enhancing their disclosure, and I think those are sort of things that comes with the territory, but it definitely helps with the valuation and multiples.
Mehdi, to Anthony's earlier point, when does this become a broader macro trade, right? We're starting to see the first signs of the pass-through to broader economic indicators, macro indicators. Do we see that equity rally then also broadening to potentially some of the second tertiary effect beneficiaries?
I think we're already going through this. The market cap contribution by the memory names is much higher. If I just were to compare it to NVIDIA's share price is kind of a flat to a slightly up year to date, but Micron, SanDisk, Hynix, Samsung, they have all double, triple, or quadruple in some cases. So you're already beginning to see that impact. We're going through this. I don't think you're going to see I don't think we're going to wake up one day and see a big banner, oh, AI and memory is contributing to the global economy. I think it's happening as we speak. It's just that there are parts of the AI like memory and networking that are going to be more critical, and perhaps there's more competition on the actual compute side.
Mehdi Hosseini, really good to get your insights. Senior equity research analyst at Susquehanna. We have more ahead on the Asia trade. This is Bloomberg.
U.S. Secretary of State Marco Rubio has met the leaders of the UAE and Kuwait as he looks to reassure Gulf allies over the interim peace agreement with Iran. It comes after Iran and Oman said they were working on an agreement over the Strait of Hormuz. Speaking in Kuwait City, Rubio sought to address concerns over the prospect of tolling in the strategic waterway.
When we mean open the straits, we mean open the straits free in international waterways. I know of no country on the planet that supports tolling or a fee for the use of the straits. That's not going to happen. The president has been abundantly clear.
Well, meanwhile, oil's wartime price gains have evaporated as the US and Iran claim progress in peace talks with more tankers openly transiting the Strait of Hormuz. For more on this, we're joined by Bloomberg Markets reporter Anthony Stevens. We're also seeing this kind of resurgence in supply flooding the markets at the moment, right? We seem to be putting aside any of the risks over a potential toll, a potential breakdown in these talks even.
Yeah, everything in the oil market is pricing in a return to normalcy, and quite aggressively so. We saw the spot oil price trading right back where it was before the oil crisis happened. And then U.S. fuel is also starting to trend lower. Though the impact of the U.S. fuel market on the global economy is obviously through inflation, and that will be the next order impact of this crisis that everyone is watching. President Trump is already putting pressure on U.S. refiners and U.S. oil companies to pass on these oil losses. It's also important to mention that forward-looking oil markets are already in contango, meaning that the surplus of oil that is coming out of the Gulf is being aggressively priced into having a much more expanded influence on the downward trend in oil. So all things considered, it does look like the oil crisis is kind of fading. Oil volatility is holding relatively firm at these levels, so that is the only risk indicator that shows some level of trepidation around this war. But as the oil price continues to break down lower, that might be coming back into normalcy as well.
Which is interesting because we're also seeing the dollar at a 7-month high. Is this a tug of war between what the oil market is doing and what expectations of the Fed will do?
Yes, some of the most recent moves in oil could also be attributed a little bit to the dollar. After all, oil is priced in dollars. And you're seeing that impact go across the commodity complex. So gold and silver being the biggest examples, they broke $4,060 quite easily yesterday. Those are very big technical levels that mark the start of the earlier in the year huge rallies. So it's quite interesting to see those technical levels break so easily as the dollar rallies. Now today we have the US PCE. That's a huge number for Kevin Walsh, who is very focused on core inflation. And as the dollar gets any fundamental support, you might actually see oil returning to being a dollar play and not a war play, in the sense that if the dollar rallies, oil could fall even further. So that's quite a big change, as you alluded to, from the dynamic that was in play kind of earlier in the year.
And before I let you go, has gold reached an inflection point too?
It's really interesting. Like gold as a retail trading asset has definitely lost some of its sheen. The fact that the semiconductor trade in the US is doing so well and will continue to do well for a couple of more days given this Micron result has really taken off the attention from this precious metal rally that was driven by fears of a dollar debasement that global retail really pushed into. Now that dynamic has alleviated somewhat. We continue to see pretty decent buying of gold from sovereigns, though. China in particular is hoovering up gold as they look to diversify their monetary assets.
Bloomberg Markets reporter Anthony Stevens shaping up for a pretty interesting trading day here in Asia. But we continue to talk geopolitics next. Canadian Defence Minister David McGuinty joins us to talk about everything that's going on in the Indo-Pacific. All right, take a look at how we're setting up here in Asia. It is all going to be back to that exuberance over the AI tech-related trade, thanks to a couple of stories that we saw overnight in the late trade, really carrying through that sentiment, particularly when it comes to the tech-heavy names in Korea, Japan, and also namely Taiwan as well later on. It is the Micron story, the revenue forecast really blowing out expectations, particularly when it comes to highlighting these 3-year strategic contracts that are intended to give a little bit more consistency and stability in what can be quite a volatile side cycle of boom-bust for memory chip producers. We also saw some positive sentiment coming from the Qualcomm Investor Day as well, so that's helping support sentiment for both of those stocks. And we did already see the correlation pre those Micron numbers between Micron, how it was trading and how the Kospi was trading as well, to the downside. The Kospi eventually ended out the day with a small gain, but we're expecting to see a real pop at the open today. Nasdaq 100 futures, unsurprisingly, seeing a strong gain of 2%. Broader S&P futures, US futures still up by 0.6% as well. The Nikkei 225 also looking like we'll get gains about 2.5%. The yen still at that level where we are on yen intervention watch, of course, but not much has really happened. We do still have the dollar, though, at that 7-month high, so that'll continue to put pressure when it comes to the weakness across Asian currencies, in particular the yen. But Shery, when it comes to the geopolitical situation, we are seeing oil continuing to hold those losses, and the talks between the US and Iran seem to be ongoing and productive for now.
Yeah, of course, Heidi, we are watching the latest geopolitical developments, as we've also seen NATO Secretary General Mark Rutte meeting President Trump in the Oval Office, seeking to ease his frustration over allies' reluctance to support the war against Iran. He presented data showing NATO nations have increased defense spending since President Trump took office and praised his pressure on allies. Trump again criticizing partners for resisting the use of their bases.
What I think is important is to be fair, and fairness dictates that this president is really doing a huge amount of work to get NATO in better shape. He had a big success last year in The Hague with the 5% spending commitment.
Meanwhile, Canada is stepping up its military presence in the Indo-Pacific. Defense Minister David McGuinty met this week with his Japanese counterpart to discuss expanding cooperation. Canada plans to send warships on 2 deployments this year, strengthening its footprint in Japan, South Korea, and the Philippines, even as it also builds closer trade relations with China. Joining us exclusively now is Canadian Defense Minister David McGuinty. Really good to have you here in the Tokyo studio. Thank you for making the time.
Thank you for having me.
Especially since you're pretty busy. You brought a big delegation. Tell us a little bit about why now and what that symbolizes as well.
Well, it's the first time that a defense minister joins a trade minister to lead such a mission. It's 300 strong, 175 organizations and companies from every sector. About 50 of those companies are in the defense sphere. So for us, this is a moment where we're continuing to build, deepen, and widen our relationship with Japan, and also in the context of the Indo-Pacific, where we're making similar investments, spending the kind of time, getting Canada back in the groove, so to speak, when it comes to the Indo-Pacific.
Tell us a little bit about that. Do you feel that Canada has retreated a little bit in the past, and where do you expect to see more involvement and cooperation with partners here?
Well, typically it would be government to government, military to military, business to business, which is a big focus right now. Canada has upped its GDP spend on defense to over 2%, achieving the target a full 5 years ahead of schedule. So we're very pleased now to get the resources that we need to make these investments. So we are investing heavily in rebuilding, rearming, rebooting our Canadian armed forces. We also have a new defense industrial strategy where we're investing heavily in Canadian companies, the defense sector, and we need to do that together with good partners like Japan.
The NATO Secretary General trying to appeal to President Trump's side when it came to boosting their spending. It doesn't necessarily seem to have worked. How is your relationship with the United States, especially military-to-military security concerns?
Listen, we have a continental security arrangement with the United States. We manage the relationship. We have NORAD, of course, which is the only binational command in the world. It works well. It's together. But, you know, this is about now for Canada expanding in this area here into the Indo-Pacific. I've had meetings and arrangements with folks in Indonesia. The Philippine Minister of Defense was in Canada 2 weeks ago for the first time. Korea, Japan, of course. Australia just sold their over-the-horizon radar system to Canada, the largest single defense export in Australian history. So Canada is moving coherently, systematically into the region.
I mean, you are sending your warships to the Indo-Pacific for port calls to Japan, training as well, exercises. Is there a concern that that might be seen negatively by China?
It's not new. We're recalibrating our relationship with China, but we're also, as I say, we can do both at the same time. We can recalibrate. But on defense, security, and intelligence, we're also reaching out to like-minded, values-driven, rules-based countries like Japan. And so far it is taking hold. People are very receptive, welcoming Canada. But the presence of vessels in this area is not new for Canada.
What does recalibrating the relationship with China mean?
Well, it means we had some period of difficulty between Chinese and Canadian authorities. the two Michaels, all that year, several years ago. But we're now rebooting that relationship on different fronts, and this is exactly where we're at. But this mission is really, really focused on Japan, of course, because of the depth of ability, of talent, AI research, quantum, cryptography. This is something we're looking at: space, maritime domain awareness. There's a powerhouse here of talent, and this is exactly what we're looking to plug into also from a Canadian perspective, because we know if we actually combine our efforts here, we're going to do much better.
When it comes to these exercises and training in the region, we always see them very regularly. But very regularly, we also get negative reactions coming from the likes of Beijing. We have seen tensions increase in the Taiwan Strait. Now with geopolitical flashpoints like Ukraine, does that give Canada also a different sense of responsibility when it comes to different regions?
Well, it would be fair to say that things have changed. Tensions have changed. The geopolitical has changed. Canadians are realizing now that their geography won't necessarily protect them. We saw, for example, in the Middle East, Iran deploy a missile that actually traveled 5,000 kilometers, when we've been told for over 2 decades they had no such missile in their arsenal. So we understand that change. We understand the threat landscape has changed. But we're managing our way forward cautiously, thoughtfully. We're building these relationships. We're moving into the Indo-Pacific in a way we planned on doing so in 2017, 2018, the pandemic hit. And now that we have more resourcing as a result of the 2% fund, and we're well on the way to the 3.5% fund, we are in a position now to do much more.
Is it possible to equate the Taiwan risk as a Ukraine risk?
I wouldn't say that. I would say that it's a risk. I would say that countries here are doing a phenomenal job of managing their way through it. We've got to keep talking. Most importantly, we've got to keep the dialogue moving. But this mission here is largely now about consolidating relationships with Japanese actors in the business and the government in many spheres. So this is what we're all about here now. That's why 300 people decided to join us. It was not really difficult. But here they are. We had a major gathering last night of 500 people, including 200 Japanese executives and leaders. I met with my counterpart yesterday for a full hour, Minister Koizumi. We had a very good discussion about Canada-Japanese relations in this area. We're making progress.
I know that you also toured some frigates as well earlier this week. Are there any specific defense purchase commitments? We know that, of course, Japan has lifted most of its export restrictions when it comes to military equipment.
Look, we're looking at all kinds of options and opportunities. That's what the business folks have been doing here for the last 2.5 days. Japan is a powerhouse in certain sectors. We're a powerhouse in other sectors. This is about us procuring from Japan and Japan procuring from Canada. That's the kind of trade that we're giving rise to in our defense industrial strategy. And I know that Japan is also looking to see how they can accentuate their own. That's what the Minister and I in part spoke about yesterday. So it's very encouraging. We're like-minded. We have the same values. We're rules-based. We believe in the international order. We believe in the United Nations. We believe in dispute resolution. That's why we're pleased to be here.
When it comes to really cooperation between smaller nations, we have seen the global combat air program as well between Japan, Italy, and the UK as well. How does Canada view such partnerships?
Well, we view these opportunities to come together and pool resources and research and capacity as a positive thing. Many smaller countries, I would hardly classify Japan as a small country. It's an economic powerhouse. Our countries can come together, take our best, our brightest, combine our efforts, and do well. We can do well, obviously, for our people, and we can do well in terms of our industrial sectors.
Would Canada be considering perhaps joining that initiative?
Canada's manifested an interest. Canada is monitoring it closely. It's very interesting to see how it's going forward. But right now, we're so busy executing on this Indo-Pacific strategy. We're continuing to stay in touch with our folks. I think we'll talk more about it when we get to the Leaders Summit in NATO. I'm looking forward to seeing my counterparts, as many of those who might be able to come from Italy, Japan, and of course from the UK.
And of course, Iran, the ongoing negotiations will be a key theme there. How confident are you that we'll get an interim deal to be a permanent one?
Always remain hopeful. There's no other way to be, in my view. We have to remain hopeful. Peace is the best outcome. The alternative is never a positive one. So I think that if we can help guide along both parties in the negotiations, encourage it, that's a good thing. But we remain available to be of assistance in the multinational maritime mission that is being headed up by the Brits and the French. Canada has offered up its own capacity, vessels, demining, cyber, intelligence. we'll see how that all comes together.
Before I let you go, we just saw Prime Minister Carney releasing a statement in terms of a potential multilateral security defense bank. What do you think of that mechanism functioning as a World Bank? And is there any traction if this initiative were to be pushed forward?
We think this is a phenomenal opportunity for all of our countries, because the Defense and Security Resilience Bank, the DSRB, modeled after the World Bank in structure, would actually provide a lot of capital and a lot of assistance to small and medium-sized enterprises right here in Japan, back in Canada, in the Philippines, all over the world. Any member state would be able to plug and play in the system, be able to borrow, be able to capitalize. We need more investment in the defense sector. This is what this is intending to address.
Did you discuss this potential bank with Japan while here, and what reaction did you get?
Yes, we have. We've raised it on several occasions. I think the government here is considering it, as are other countries. But right now we're in the process of moving it along with other jurisdictions to see if we can get more interest.
The Canadian Defense Minister here in the Tokyo studio. Thank you so much for making the time. Here's David McGuinty. Heidi, I'm sending it back to you.
Yeah, great conversation there, Shery. We've got some updates when it comes to one of the big US banks, Citi, to boost their quarterly dividend 12% to 67 cents per share. This comes after the biggest US banks boosted their dividends after passing this year's Federal Reserve stress test. It's a hurdle that has softened in recent years as regulators hashed out new requirements. But we have seen Citi in that reaction, boosting the quarterly dividend, continuing that $30 billion stock buyback program. The dividend being boosted by 12% to 67 cents per share, continuing the buyback program there, and also in that statement talking about the elements of the improved stress test performance, the capital resilience, reflecting their strategy to build a more resilient firm. The 2026 stress test results imply a reduced SCB, the buffer of 3.3%, indicating some level of capital strength there. So 12% quarterly dividend increase to 67 cents per share, and the continuation of the $30 billion stock repurchase program with that commitment to shareholder return. So we did hear from the Fed's exam really showing that all of the banks examined will maintain enough capital to withstand a hypothetical scenario of an economic downturn, and the results do tend to set the tone for really how aggressive banks will be in terms of that shareholder capital return element there. We did hear from some of the other banks as well. JPMorgan Chase increasing its quarterly payout to $1.65 a share from $1.50. Goldman's raising to $5 from $4.50. JPMorgan also authorizing that new $50 billion, share repurchase program that takes effect on July 1st. And the latest we're hearing now from Citi. More ahead on the Asia trade. This is Bloomberg. Bloomberg's learned that Anthropic is accusing Alibaba of using thousands of fake accounts to illicitly access its Claude AI model. The US AI developer says rivals, including Alibaba, may be trying to build chatbots cheaply through a technique known as adversarial distillation. Tech and industrial policy reporter Maggie Eastland joins us now from Washington. So talk us through what exactly the accusations are, and I'm also curious as to what adversarial distillation comprises.
Great question. So Anthropic is accusing Alibaba, one of its biggest Chinese competitors, of essentially using thousands of fraudulent accounts to access Claude. What's important here is Anthropic actually doesn't allow Chinese users to tap any of its models, even as regular users. So somehow Anthropic is alleging that Alibaba got access and then queried the model, asking it specific questions about agentic reasoning, coding capabilities, and then using those outputs to feed into its own AI model. Now, Anthropic alleges that this is essentially a violation of the intellectual property that they've created and all the investment that they've put into making Claude.
We know that Baba's already got its own issues. It's litigating against the Department of Defense when it comes to this Pentagon blacklist as well. Have we seen an additional response from Washington when it comes to these continued warnings and tensions?
There are early signs in Congress that lawmakers are interested in this issue, which, as you said, the company defines as adversarial distillation. So in both the House and the Senate, a bipartisan group has formed, and they're introducing and pushing for legislation that would direct the administration, specifically the Commerce Department, to consider blacklisting entities that are found to be distilling or taking data from U.S. model companies, so that if that follows through, that could be a big hit to some of these big Chinese AI firms.
Why is this issue so crucial for Anthropic at this point?
I think Anthropic has a lot of financial interest right now in this issue. The company is valued by private investors at about $965 billion. Obviously a huge valuation, and they're looking to IPO very soon this year. So clearly they have some interest in assuring investors how they're dealing with some of these cheap competing models from China. And they're also concerned about the national security here, of course, and they mentioned that in this letter that we've obtained. But, I'd be remiss not to mention that they have a clear financial interest in sort of tackling this issue of cheaper AI models from China that are being widely used, including in the U.S.
Bloomberg's tech and industrial policy reporter Maggie Eastland there joining us from Washington. And a former president of Chinese tech giant Baidu says he's confident that China's AI players can convert massive infrastructure spending into real returns. Tsinghua University's Ya-Qin Zhang also told us how the shift to agentic AI will drive most token generation to so-called edge devices such as cars, robots and wearables.
Certainly we're moving from generative AI to agentic AI. And also, the whole token generation take place mostly in the future on the edge, on your devices, on the cars, on the robots, on the glasses, on your watches. I would expect in the future 80% of the tokens will be generated not from the hyperscalers, not from the data center, but from the edges. So we see a huge revolution and transformation in how we manage and how we interact with devices, what I call the cockpit for UI.
Can you separate the hype from the reality in things like Zhipu? Their latest model, GLM 5.2, is supposed to be, the expertise is in coding for agentic AI. They're talking about being sooner than anticipated on par with what Anthropic is doing and the like. But again, they're bleeding money, as a lot of these players are. So where do you separate the hype from reality?
Well, Zhipu is a great example of the China innovation in terms of very high efficiency and just like DeepSeek and flexible architecture and with they generate tokens which are as powerful as some of the frontier models. But right now AI is still in the infrastructure is still in the investment stage. In the next couple of years, it has to prove it's able to generate the real income. That is able to scale to other part of the economy. Obviously, that is a challenge. But I'm confident eventually we be able to prove this investment in infrastructure makes sense.
Tsinghua University Chair Professor Ya-Qin Zhang speaking with our Chief North Asia correspondent Stephen Engel. We do have more ahead here on the Asia Trade. This is Bloomberg.
This is a setup for the Korean market opens. The AI trade back with solid forecast from Micron, positive comments coming from Qualcomm, and of course we're headed towards SK Hynix seeking $29 billion in the U.S. listing. For more on what to watch in Korean markets, equities reporter Sang-Mi Cha joins us now. Of course, there's a lot of positivity back again around artificial intelligence, but it's been a pretty wild ride for South Korean markets.
That's correct, Shery. Indeed, we're seeing the pre-market shares actually rallying already. And thanks to the Micron earnings that we have seen, this consolidates the conviction in the HBM market that, the shortfall in the memory space is going to last for longer. But of course, the key idea and the key driven factor here is, of course, the SK Hynix U.S. listing. The company says it's going to start trading around July 10th, and they're going to be using these proceeds to buy more EUV machines and to extend their capacity. But of course, this is really significant milestone for the company, which has added about 850% over the past year, and it has surpassed that $1 trillion market, and it's actually close to catching up Samsung's market cap as well. And this is all coming to this memory space. Of course, the whole trade has been surrounded by the AI hardware space, and of course, when it comes to the high bandwidth memory, the advanced chips, that is very important for processing the AI space, inference, and all of this. It is SK Hynix which dominates that space. It has 58% of the market share of HBM. So this listing is key when it comes to the valuations, which has been quite suppressed for SK Hynix. It trades at around below 10 times forward earnings, right, and that compares with its other global peers.
Right now, hearing from local media that SK Hynix is weighing expanding their investment in Cheongju NAND fab. When it comes to the overall volatility of the Korea market, we are seeing even authorities delaying their single stock weekly options. Just shortly, what is the significance of this?
That's right. All the interest has been in the ETF space lately. And what authorities had said earlier about how they regret launching these single stock ETFs, leveraged ETFs in Korea in May, that has kind of connection to this as well. So weekly single stock ETFs would have also provided some liquidity in the space, but also could have exacerbated the swings that we're seeing lately, which is 5% up and down, has become a norm in the Kospi. And so the space here in the leverage ETF space is what the attention is here, especially the CSOP ETF in Hong Kong has been drawing a lot of interest with 15 billion in AUM as well.
Sang-Mi Cha, Bloomberg's Asia equities reporter, as we head towards the market opens in South Korea, and as Sang-Mi mentioned, those big swings that we continue to see this week. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens as the AI trade makes a comeback. Haidi, of course, we have that strong forecast from Micron, positive comments coming from Qualcomm, not to mention that oil prices now around those pre-war levels.
Yeah, no hurdles ahead when it comes to some higher trading in Asia today, particularly when it comes to the start of trading in Korea. But Shery, we are still really watching for the durability of this rebound rally, given that we have seen in the past, even with the likes of Broadcom, for example, that stellar numbers may not necessarily translate to that longevity of optimism.
And really, the skepticism has been felt throughout the week as well, right? With the ongoing tech sell-off that we have seen on and off here and there for the past few weeks. We had seen the Japanese stock market, for example, down for 2 consecutive sessions. We have been focusing very much on the Japanese yen as well. Oof, as it nears that 161.95 level, which is that low that it hasn't seen since 1986 against the greenback. But when it comes to the stock markets, it's really about those semiconductor equipment makers, anything exposed to AI. Do watch out for those names, Tokyo Electron, SoftBank as well. Do watch out for JGBs because we do have a 20-year JGB auction today. We had sort of weak demand for a 5-year JGB auction earlier in the week, and we continue to see more BOJ hawkishness. So we had some comments released from Governor Ueda talking about really the risk now being topping that 2% inflation target. But of course, South Korea will be the big one when we're watching those tech moves, right? I mean, especially given that SK Hynix is seeking $29 billion in a U.S. listing. And we have seen right now untraded Samsung Electronics still a pop of 5%, and the Kospi also extending those gains in the overall index that we had seen in yesterday's session, but the weakness in the Korean won continues. We have seen so much volatility in the South Korean market, that drop of 10% just on Tuesday to recoup some of those losses that we have now seen authorities delaying their weekly single stock option when it comes to individual stocks like SK Hynix and Samsung. Haidi.
Yeah, take a look as we continue to watch the picture for oil prices in particular, holding on to most of those losses. We are starting to see that supply side return really breaking through now. This as the peace talks continue with seemingly some progress being made. But at the moment, we're seeing markets really extending those declines and pretty close to erasing that wartime price gains that we started back in February. These signs of swelling supply, progress on the peace deal, parts of this market we're actually seeing really suddenly a wash in supply. We've got oil offers coming from the Middle East, from other regions like West Africa there as well. So the price of physical barrels has been trending lower. Watching treasuries at the moment, particularly on the long end, we're seeing 30-year yields lower since April. These inflation fears are starting to ease. For the dollar, it has been kind of a battle between what we're seeing with the oil price cycle, but also expectations of what we could see from the Fed with that inflation reading to out over the next couple of days there as well. Australian stocks are starting lower, 0.3% there. We did see that tech sector benefiting in the previous session with the rotation out of Asia's chip makers, but we may not see that trend play out today. Gold is one to mention, though, because it does feel like a little bit of an inflection point around that $4,000 an ounce level after falling through the threshold for the first time since November. That strength in the US dollar, that 7-month high, prospect of higher rates both weighing there. Let's bring in Kerry Craig now, who's a global market strategist at JPMorgan Asset Management. Kerry, always great to have you with us. So talk about how you, I guess, view the volatility that we continue to see in these AI names, in the chip maker names. Is the good news story of Micron's revenue projections enough to sustain a longer leg of the next rally, or should we continue to see a lot of back and forth given some of the more existential questions over the sector?
Good morning, Heidi. Well, I think the market is obviously very sensitive to the fact you've had a strong run in a lot of these segments of the sort of up end of the AI supply chain around semiconductors and memory, and also very conscious of the earnings outlooks being very strong as we head into the US earnings season, as well as the ones we got overnight. So the president, obviously thinking about the movement higher in the market, is predicated on this earnings strength coming through, and so sensitive to the disappointment that could come on the back of that. You know, our view is that we're still, fairly early, I think, in the AI sort of thematic cycle, thinking about it as more of a secular theme overall, and so it's natural to have some of these bumps along the way. I think it's also a function of seeing a little bit more repositioning, given that we have, some upside coming in on the economic backdrop with those lower oil prices, a better global growth story, and a little bit of repositioning into some sort of non-AI parts of the market to take advantage of either valuations or just building in a bit more diversification. So I think it's a relatively healthy move. It does add that volatility that can be a little bit unnerving, but broadly we still see it being entrained to be a main driver of the markets over the coming 6 months.
If you take a look at what we're seeing with SK Hynix at the moment, at the open jumping 11% on that US listing plan, the Micron earnings, of course, there's been almost sort of a very strong correlation there. What do you make of this potential $29 billion US listing plan? Because there is a situation where we're seeing potentially some struggles for the domestic market in Korea to be able to handle the enormity of the demand for companies and tech like SK Hynix.
Yeah, certainly companies go to the US because they're looking for that depth in the capital market that they have there. It's not unusual for companies to list in the US relative to their domestic market, and I think that is just taking advantage of the demand we're seeing in this part of the market, and given that it is going to be a longer term theme we see playing through. So obviously there's been lots of concerns around the issuance of equities this year, the rise in that, and also the issuance of investment grade credit. The market has had the ability to absorb that, and we don't see this as being relatively any different to that. There's a lot of money that's still there, still being allocated through pension funds, etc., which will absorb a lot of this issuance. So we think it's, again, just a way of seeing these companies continue to expand, to attract that capital, to allow them to grow, and to meet some of this increased in demand for what they actually produce.
I mean, given that we had SpaceX absorbing a huge part of the IPO capital out there, are you at all concerned about SK Hynix U.S. listing? And also, just to your point earlier about moving toward perhaps more quality tech, given that we have seen even this week the uncertainty about some of these tech names, including even hyperscalers being at one time compared to software stocks, how much really certainty is there in this space?
Yeah, it's two parts to that question, really. I guess on the first part around, is SpaceX taking all the oxygen out of the room when it comes to demand for these large IPOs and the expectation around some other ones coming through this year? I don't think that's the case. I think there's plenty of demand for these companies to be part of these companies and thinking about the opportunity they present. So I think it's natural that a lot of these companies are looking to list a little bit earlier. Again, and they're listing earlier relative to how long they've been private, so it's been for a while. So I don't see that as being a real challenge for the market. The second part about moving towards more quality tech, I think we are seeing a lot more differentiation when it comes through in terms of the performance around some of the individual hyperscalers, as well as thinking around the different performance of AI-related sectors, whether it's utilities, materials, hyperscalers, thinking about semiconductors. You are seeing that differentiation come through. So I think a bit more selectivity around where to position in that value chain for AI is important over the second part of the year. And really it does again come back to focusing on where all that capex is flowing through the upstream part of the cycles, and that's where we would tend to focus on at the moment.
Kerry, of course, some of the optimism also has to do with how the Iran war negotiations are going. You're seeing oil now retracing some of those gains that we saw during the war and now back to pre-war levels. This fall in oil prices, together with perhaps signs that the physical supply is now perhaps looking to see a little bit of a glut now, given that that was the situation before we went into the war. Are there any implications for certain assets around the energy trade that we should be watching out for?
Yeah, obviously looking at the earnings seasons coming up, I think there's going to be a pretty strong bid under the energy names given the performance of like oil and gas. The movement we've seen in oil prices most recently, I mean, you look at the WTI, it's closing in on its pre-war level, even the Brent level coming back down below 80 and towards 75. Those are big movements and probably a little bit more than we had anticipated, but given that there is, just a heavy amount of oil sitting in the Gulf ready to come out, I do think that oil price might start to move back up a little bit as we think about some of the longer term consequences of, the political risk premium that may be put into that price, thinking about some of the potential costs that could be added depending on how those Iranian-US negotiations go. But I think it's also a function of the softness in demand we've seen come out of China and the ability for countries to source oil and gas from other places. So we might see that price lift up a little bit. I think when it comes to the broader outlook for earnings, obviously it's going to be more impacted across those input costs that we've seen come through and how companies are adjusting for that, where they think they're potentially going to see those costs continue to linger, given that supply chain normalization does take a little while. But on aggregate, when we look at the consensus earnings numbers for earnings for the second quarter, again, they're above what we saw in the first quarter, and that was already a very high bar. So that good global growth backdrop that we're seeing come through that's helped by energy prices, inflation that should come down does set up a pretty good case for thinking about still a positive exposure to risk assets and equities overall.
Talking about the inflation, the Fed's preferred gauge, PCE, coming up. How are you looking at this and what the market implications could be? Are we going to see a jolt?
Well, I think we might start to see, what could be the high watermark when it comes to inflation in the May numbers. We've obviously already got the CPI numbers. PCE, it's a different measure. It's calculated differently. And it's interesting to note that the core level of CPE has been running above the core rate of CPI. So a little bit of differentiation in the way they're calculated and the way that some of this AI-related spending is impacting the components of them. So I think that's worth watching in terms of how much that AI capex is really feeding into broader levels of inflation. But more broadly, shelter costs are moving down. The impact of tariffs probably not as meaningful as we had assumed, and those lower energy prices should see that the inflation rate falls over the coming months. So May might be a pop higher than we saw in the prior months, but I think it could also represent the high watermark, but we may not learn that for a couple of months from now. And I think when it comes to the narrative related to the Fed and the market, already pricing in a couple of rate hikes. So unless that number is extremely high, I don't think you'll see too much of a reaction out of the markets.
The inflationary risks are even spreading to Japan. I mean, who would have thought, right? Governor Ueda coming out and saying that we could be topping that 2% inflation target, which of course we have for a while, but now the realization that perhaps this could be more lasting. What does that mean for the Japanese yen? I mean, trading at 1986 lows?
Yeah, there's certainly a feeling that the yen has been very weak. You're looking for potentially some intervention in terms of supporting it based on the news flow over the last few days. And I guess the consistent, disappointment around the pace of rate hikes we've seen from the Bank of Japan, maybe being a little bit behind the curve in terms of that, and that's why we're not seeing the movement towards a stronger yen. At the same time, obviously, the movements around the US dollar in terms of thinking about where the Fed is heading and that movement up in the last few days also being a factor. But I do think that we are expecting the Bank of Japan to tighten rates further based on that inflation outlook. We do see an economy that's reinflating. We're seeing some domestic growth coming through, and obviously want to see that domestic demand being a bit stronger. So we would look at Japan overall in terms of the economy, as well as those corporate governance changes being a fairly attractive opportunity in thinking about the outlook for the equity market there. Certainly the currency is obviously a bigger play given how weak it is and the prospect for intervention and for it to move higher from here. So just a factor to consider for investors.
Kerry, Craig, really good to have you with us, as always, global market strategist at JPMorgan Asset Management. Let's take a look at some of the stocks that are moving markets right now early in the Asia session and bring back our markets reporter, Anthony Stevens. Anthony, big moves in the Asian session, especially in the tech sector in South Korea. What are you watching?
Yeah, you guys were talking about it, right? Samsung and Hynix leading the way here. Hynix in particular is continuing from yesterday's strong session. So it's very important to remember these names closed on the high yesterday, and that's despite around $3 billion worth of foreign selling. So it's really quite extraordinary what Hynix is doing today. Also bear in mind, we've been talking about Hynix raising capital. It's very rare that a company goes to the market and raises $29 billion and it pops 8%. That speaks to the fact that this money is being raised to increase capacity for huge margin business. This is also filtering down lower to the supply chain of people that are testing these chips or producing the manufacturing and semiconductor parts that go into memory. So that's why some of these Japanese suppliers are doing so well today. And this will be very interesting to watch as Taiwan comes online today after the announcements from Qualcomm on its new chip. That new chip is supposedly supposed to address some of these memory shortages. So it'll be very interesting to see what parts of the Taiwanese supply chain react to the kind of bullishness that we are seeing in Korea and Japan today.
Bloomberg Markets reporter Anthony Stevens there with some of the early movers in this session. We have more ahead on the Asia trade. This is Bloomberg.
This is how Japanese assets are trading early in the Asia session. We are seeing the Nikkei now recouping some of those losses that we saw in the week. After 2 days of declines, the Nikkei is gaining ground, with the topics now being led higher by tech stocks, including the likes of Tokyo Electron, Advantes, Disco. Of course, we have seen what was happening in the overnight session with those positive comments coming from Qualcomm, not to mention the strong forecast from Micron. The Japanese yen still holding at that 161.70 level as we continue to watch the 40-year low against the US dollar. It's the JGB space that we'll be paying attention to today. We do have a 20-year JGB auction. We had weak demand for a 5-year JGB auction earlier in the week at a time when BOJ hawkishness is also building. We continue to get these comments from Bank of Japan Governor Ueda talking about the inflation rate topping 2%. But it will also be about fiscal concerns, right? As Japanese Prime Minister Sanae Takaichi now has unveiled that long-term vision for Japan's economic development. The plan is still calling for investing more than $2.3 trillion over the next 14 fiscal years in sectors including AI and chips. Let's bring in our economy and government reporter Erika Yokoyama. Of course, really bond traders will be watching these fiscal developments very closely. But what were the key takeaways from this plan?
Sure. So the government yesterday released more than 300 pages of investment roadmap through fiscal year 2040. Takaichi has been advocating this strategy for quite a long time. So the release of the roadmap is just another step towards implementing her agenda. And as you said, it covers 17 strategic sectors, including AI, semiconductors, defense, and space. The plan calls for more than 370 trillion yen in combined public and private investment. While the headline figure actually looks pretty big, the roadmap doesn't really provide the breakdown between public and private, so it remains unclear on how much the government will ultimately pay, actually. And one of the highlights I should note is the 101.6 trillion yen allocated for AI and chips investments.
And I mentioned, Erica, the fiscal concerns around the government, right? What are we expecting the market reaction to be, especially in the bond space, on how they accept this increased, perhaps, spending when it comes to this plan?
It's really good questions. As you said, Takaichi's spending agenda has been a long source of concern for bond investors. And, it's helped push Japanese government bond yields to multi-decades high area this year. And, alongside this roadmap yesterday, the government released the mid and long-term fiscal projections incorporating Takaichi's strategy. And the government is actually trying to reassure the market by projecting that debt to GDP ratio, which is a fiscal target under Takaichi's government, will continue to decline even with 10 trillion yen in annual government spending under the plan. However, the outcome is just the optimistic growth scenario. In other two scenarios the government's provided, the debt to GDP ratio starts rising again during the 2030s. So investors are watching, and also investors are also watching other possible spending pressures, for example, higher defense costs or possible sales tax cuts on food. Those things government hasn't clarified how they are going to finance them. So there are possible additional pressures on the bond market as well going ahead.
Our Bloomberg Tokyo economy and government reporter Erika Yokoyama there. Let's take a look at the yen, because the BOJ Governor Kazuo Ueda has warned that inflation could top the central bank's 2% target and policymakers will raise rates as appropriate. Despite those comments, though, the Japanese currency remaining at that 40-year low. Let's bring our chief correspondent for Asia FX and rates, Ruth Carson. So the yen cannot catch a break.
No, it can't. And when it comes to trading the yen, as soon as the trading bell starts ringing in Asia, the question on investors' minds right now is, will they or won't they when it comes to intervention? Now, remember, the key number for us to look at here is 161.95. That was the level where we saw that huge, move down lower in dollar yen in August 2024, and we saw the huge carry trade unwind, and that has repercussions across everything from private equity to stocks to you name it, right? Emerging market bonds. So very closely watching that level. The yen is incredibly weak. Yes, we've heard from BOJ Governor Kazuo Ueda on inflation, and investors are still saying, look, there's a reason why we are selling the yen. The BOJ is behind a curve, but now it is a question of just how far do we push this bearishness.
High yields certainly not helping the case for Japan either. We've got a 20-year auction coming up today as well. What will be the focus when it comes to this sale?
Yeah, absolutely. As Shery mentioned earlier, there were some indigestions. The results weren't great on 5-year. So 20-year is proper duration here. These are proper long bonds. Now, there is probably some relief that will come from the fact that overnight we saw US Treasury yields actually falling in tandem with oil prices. So that would definitely have a dampening effect as well on yields in our session from Japan through to Australia. But again, between that push and pull, 20-year is quite a bit of duration to digest. And it's not a very popular one either for many investors out there compared to, say, the 30-year where you match liabilities. So we'll have to see. We'll have to see. But definitely there is some tailwind here from lower Treasury yields overnight.
Ruth, really great to have you, our Chief Correspondent for Asia FX and Rates, Ruth Carlson. They're joining us from Singapore. More ahead here on the Asia Trade. This is Bloomberg.
Take a look at some of the big tech movers in the Asia session. Here in Japan, we're seeing the likes of semiconductor equipment makers, Tokyo Electron, Advantis, all gaining ground. Kioxia, a gain of 1.15%. Right now, gaining about 9% together with Advantis. But Kioxia is on a roll. We're talking about 2 sessions of gains already, seeing its best day in about a month. All to do, of course, with the renewed AI trade that we have seen on the overnight session from Wall Street. Micron coming out with strong forecasts, not to mention, of course, some more positive comments coming from Qualcomm as well, Haidi.
Yeah, Shery, take a look at the top corporate stories that we're tracking this hour. And OpenAI has unveiled its first custom AI chip developed in partnership with Broadcom. The move is part of a bid by OpenAI to get an edge by tailoring hardware to better run its AI products. Broadcom says the chip, called Jalapeno, is in testing and showing cost savings of roughly 50% compared with typical AI graphics processing units. Bloomberg has learned that Google is set to lose 2 more leading AI researchers to rival Anthropic. Sources tell us that Jonas Adler and Alexander Prutzel were viewed internally as key contributors to Gemini. The exits add to a series of high-profile departures at risk undercutting Google's position in the AI race. Shares of Cerebras plunged to its lowest level since its IPO after it issued annual sales guidance that disappointed investors despite topping estimates. The company is forecasting revenue this year of up to $865 million. The reaction underscores high expectations for AI chip companies following a record $5.5 billion listing in May. More to come here on the Asia Trade. This is Bloomberg. Let's get you back to the markets, of course, where Asian investors are digesting what was very optimistic set of numbers from Micron, right? We are seeing Asian stocks jumping alongside US futures, taking that lead from the late rally on Wall Street overnight. Really, Micron's blowout sales outlook reigniting confidence in what has been a bit of a wobbly AI trade, particularly when it comes to the last few sessions of this week for trading in the Kospi. But Korean stocks are up by close to 6% at this point. We're seeing runaway gains when it comes to SK Hynix. Japan also putting on 2.5%, but Micron itself had soared about 15% after the market closed as its quarterly sales forecast crushing estimates. We also had positive remarks out of Qualcomm as well. Australia being left behind a bit at this point, 0.3% lower. Well, China has halted nearly all supplies of key mineral exports to Japan amid an ongoing political dispute. The move is hurting Japanese companies and increasing pressure on Prime Minister Sanae Takaichi to seek a diplomatic off-ramp with Beijing. Bloomberg's Japan economics and government reporter Yoshiaki Nohara joins us now for more. So, what do we know about this standoff and the impact of these curbs on Japan?
So Heidi, the key word here is a targeted impact, targeted pain. That is what China is inflicting on Japan in the wake of Takaichi's remarks on Taiwan. So in other words, it's not across the board total ban of rare earth to Japan, but Japan is definitely getting impact and being hit for some shortages for some parts of the critical supplies of rare earth that the nation's manufacturers need.
Yoshi, what's going on with this relationship? I mean, I would think, given the broader geopolitical backdrop, that neither of these countries would want to be in a difficult relationship. And yet, it's been quite some time since Prime Minister Takaichi's remarks on Taiwan, but we continue to see the tensions.
Well, I think the the ongoing tensions are not the immediate off-ramp being seen. You know, I've been reporting closely how the diplomatic ties may be being restored between the two nations, but the communications have been, at least on the public level, that is very muted. I mean, there's some informal chats going on, but we're not seeing like the formal, the ministerial level, the joint press conference or something like that. So you can say that it's very much ongoing, this tension is, and there's no immediate off-ramp seen yet.
So what should we be looking out for next?
Well, I guess that's a really good question, but everybody will be looking at a key event later this year, which is going to be APEC summit in China. China is hosting the this year. There's a lot of expectations whether the Takaichi will be able to secure a meeting with Xi when she visits there. But there's not much promising signs for that to happen for sure yet.
Bloomberg's Japan economics and government reporter Yoshiaki Nohara there. Let's discuss all of this tension, especially around critical minerals. Joining us now is Xiaomeng Lu, Director of Geotechnology at the Eurasia Group. Xiaomeng, really good to have you with us. What do you make of the latest measures by China when it comes to Japan and the significance and implications for industry here in Tokyo?
I think that's a very salient point you raise. I think this is what the card that China played 10 years ago. And to a certain extent, that made Japan the country in the world that's most experienced with this type of challenge. And they have been working on this for a long time and actually phased out some of the lighter rare earths from their products. I think from that perspective, they have a lot of expertise to offer to the rest of the world who is also seeking solutions to diversify from Chinese supply chains.
Yes, to your point on diversifying supply chains, I recently spoke to the CEO of Resonac here in Japan. Take a listen to what he had to say.
I think we're making a good progress, and but still, China is relatively less expensive at this point. So, I mean, as far as China keeps on shipping the products out from the country to Japan, I'm good with that.
To Takahashi-san's point, how do you overcome the price issue here when it comes to China?
Yeah, I think in terms of feasibility and pricing, that's one of the biggest challenges in decoupling from Chinese supply chain. Like in the short term, some of the elements can only exclusively source from China. And then if you explore alternatives, you have to shoulder the very high cost in the process. And for some of these rare earth elements, it's almost impossible. It takes like maybe a decade or so. That will be a realistic timeline to do that. That shows how challenging it is to tackle this problem.
There's no realistic alternative in this supply chain, is there? Because we've seen global efforts, European efforts, US efforts to try and diversify, to try and create bodies that have a price floor. But is the reality that we are decades away from the ability to be able to meaningfully diversify from China?
Yeah, I totally agree with you, Heidi, on that. As G7 come together to form their own critical mineral pact, China is not standing still. The government is standing up new capacity to coordinate mining investment by state-owned enterprise. They also enact new law to authorize countermeasures against foreign restrictions on Chinese supply chain. And this is a whole of a government initiative to defend China's dominance in this sector.
And in fact, we are seeing the blowback from Beijing, right? We've seen China calibrate these responses to US tech firms and defense designations. Of course, we've got some of China's firms on the Pentagon blacklist as well. So how much worse does that situation get? And it doesn't seem to be particularly productive for either side.
Yeah, I think right now we are kind of at an impasse in terms of rare earth control versus US export control on AI chips to China. But if you look back a few months, this is a slight improvement actually from last October where China didn't understand why US issued a very harsh 50% rule on their entity list companies. And their response is very strong retaliation. It's a forceful push of multiple heavy rare earth elements getting on their export control list. And that shook up the whole world. That woke up many companies and many governments, and they realized that this is a potential long-term existential risk for them. I think from there, China climbed down and realized that they punched too much on this one, and they want to walk back from it. But I think a lot of the national governments are still having a bad taste in their mouths, and that's why they're all motivated to work together to seek a solution, even a solution is not immediately in sight.
Given the difficulties that we already know when it comes to essentially building up a rare earths industry from scratch, even through enormous amounts of investment, do you see any possibility of something that looks like a grand bargain? Because we know that Beijing will probably want better access to AI technology, for example. Do you see any kind of scope for compromise on these two industries and these two types of technology that are proving to be the most effective economic points of leverage?
I think theoretically that's possible. If the bilateral relationship between US and China warm up throughout the year, the leaders will meet at APEC, and they are supposed to meet even before that when she travels to meet Trump supposedly in September. And then there's a third time for them to see each other at the sidelines of G20. I think if you project a positive trajectory, I think there could be some exchange, both on the export control front for rare earths and for AI hardware, and both sides will get something out of the deal. I think that is assuming that we're on the trajectory to a warming relationship towards the end of the year.
When it comes to diversification into different regions, we also always hear the likes of Australia come up, some European companies as well. In your view, are there some specific territories that might be best suited to ramp up production as quickly as possible?
Yeah, I think if you look at the market dynamic in this sector, a lot of the developing country wants to turn their resource into economic engine, but they also want to secure the mining and processing capacity the value-add industry in their territory. And for that part, they need the developed economy to sponsor that deal. And that negotiation is still ongoing. I think that's a very difficult transaction to go forward with. But among these countries that hope to form some sort of deal and partnership, I think Australia has a long history in supporting their miners with tax credits, R&D funding, price floor mechanism, and they have this type of policy expertise. I think that will help them to get ahead of its peers.
Xiaomeng, really great to have you with us. Xiaomeng Liu, who's the Director of Geotechnology at Eurasia Group. Let's get you caught up with some of the other global headlines that we're following. And NATO Secretary General Mark Rutte has met with President Trump in the Oval Office, seeking to ease his frustration over allies' reluctance to support the war against Iran. Rutte presented data showing NATO nations have increased defense spending since Trump took office and praised his pressure on allies. Trump again criticized European partners for resisting the use of their bases.
What I think is important is to be fair, and fairness dictates that this president is really doing a huge amount of work to get NATO in better shape. He had a big success last year in The Hague with the 5% spending commitment.
President Trump and Senate Republicans have squabbled as the president cancelled plans to sign a housing bill, and lawmakers pressed him over the Iran war. Bloomberg has learned that Trump defended his war effort during a private lunch after facing criticism from Louisiana Republican Bill Cassidy. The decision to delay the housing bill spoils a chance for lawmakers to address voters' affordability concerns. Venezuela has been hit by two of the biggest earthquakes in its history, toppling buildings in Caracas, knocking down power lines and damaging the capital's main airport. A magnitude 7.2 quake was followed less than a minute later by an even larger tremor measuring 7.5. Terrified families remained in the streets as the capital was hit by aftershocks. More ahead on the Asia trade, this is Bloomberg. Take a look at what we're watching when it comes to this rally that continues for the Kospi, and this obviously on account of the positivity from the Micron-driven rally that we saw overnight in the late session on Wall Street. The AI-fueled forecast really shattering even the most bullish estimates there. So we did see that quarterly sales forecast exceeding estimates, really building this hope that the AI-fueled growth run remains strong, with that strategic customer agreement element as well being quite positive for perhaps avoiding some of the volatility of the boom and bust cycles across the chip industry. SK Hynix, they're also catching a bid, up by just about 8%. We're also seeing some gains there for Samsung Electronics. For Hynix, of course, it is really over this possibility of its planned US listing as well. So watching to see how it can tap investor demand with this potential $29 billion US listing plan. The Seoul-traded stock climbing about 850% over the past 12 months, with the market value above, of course, $1 trillion. Well, leveraged single stock ETFs have become, of course, a popular way for retail buyers to get amplified exposure to the AI chip trade. Examples include the Hong Kong-listed CSOP SK Hynix daily 2x leveraged products and the US Direction ETF that tracks Micron. But Bloomberg Opinion columnist Shery Ren thinks that investors are playing this game at their peril. Shery joins us now. So you can kind of see why investors would want to buy these single stock ETFs, particularly when the market narrative for AI looks like this at the moment. There are risks.
Absolutely. What we are seeing is that retail investors, they love buying leveraged single stock ETFs over options because they're kind of easy to understand. When you market an ETF as 2x leveraged, that means investors are kind of expecting to receive twice the daily returns of an underlying stock. And they don't need to know how to trade options or maintain margin accounts. So that's very easy to understand. However, in the market where we see 10% up and downs whipsawing through all the AI stocks, it can get very dangerous because let's take Hynix as an example. On Tuesday, Hynix was down 8%, and today is up about 8 to 9%, right? And if you buy the underlying stock, more or less this week you're breaking even. But if you're buying 2x leverage stock, there is a mathematical problem known as volatility decay. You actually, the underlying Micron, the underlying Hynix stock has to rally a lot harder than 8% to break even. And we're seeing it with those leveraged ETFs. I mean, if you look at Hynix, this month is up about 15%, but these 2x leveraged ETFs, they are not up 30%.
I mean, but leverage ETFs are huge, aren't they? I mean, we have seen hundreds just pop up in the last few months. How dangerous is this for the broader market then?
I think it's quite dangerous in that if you look at the traditional leverage ETFs, you want to basically juice up the returns if you feel like the underlying asset, say it's S&P 500, is too boring, right? Like if it's moving too slowly, you want to buy those things. Or if you can do a leverage ETF over utility companies like something like Berkshire Hathaway. But if you are doing leverage ETF over Micron or Hynix, it's layers of volatility stacked on top of each other. And I'm not sure retail investors really understand how dangerous this kind of ETFs are.
Bloomberg Opinion columnist Shery ran there with the latest on her take on leveraged ETFs in South Korea. More ahead on the Asia trade. This is Bloomberg. Chinese solar manufacturer Jinko says it expects to break even this year as government measures ease the chronic overcapacity that's plagued the sector. Global Vice President Danny Chan told us exclusively where they're seeing opportunities and the impact of the U.S.-led war in Iran.
This year is a pivotal year for recover the break-even. And I'm so optimistic through the year that the profit will recover to the normal level. Yeah.
So do you think the break-even can be achieved this year?
Yes.
What is your most important market for growth right now?
Middle East, Asia, Southeast Asia particularly, and the U.S. because of the explosive growth of data centers, and also the European.
Is the Middle East business being impacted by the Iran war?
Yes, sure.
How big of an impact?
I think it counts for 25 of our whole business. Yeah, they are so ambitious. You know, the region, especially Saudi Arabia and the UAE, lay out a very ambitious plan and targets to shifting from their oil export to their computing power and green power export.
I'm curious about the U.S. because recently you have divested your stake in your U.S. factory and reduced your stake to 25%. I suppose it's to comply with regulations, but does it mean you are reducing your priority to expand in the U.S.?
Of course not. Yeah, we will. This actually is just you know, as you said, comply with restrictions, and we will continue to further strengthen our footprint in U.S. because this market, first, it's a premium price market, and it has robust and long-term sustained demand for renewable, especially driven by their data center explosion. So it's very important for us, not only the PV sector, but also the ESS business.
But given the regulations to qualify for these tax credits, does it mean that you have to change the way you do business in the U.S.?
Yes, more flexible and more diversified cooperation models, but joint partner, joint investor, or other things.
Let's talk about energy storage because that has become a new emerging growth driver for many solar companies. What is your company's business outlay in the ESS space?
The sales target for ESS business this year is set up 10 gigawatt hour to 12 gigawatt hour, more than doubling that of 2025. And in the next 3 or 5 years, yes, maybe so PV will still be the dominate the revenue and the profit contributor, but the BSS sectors is growing so faster with annual growth rate is about 100 to 150 for solar. So it will catch up.
What's your capex spending?
Yeah, it's a secret.
That's a secret.
It's a secret. Don't worry about fund. Don't worry about capital. So much capital waiting for entering this sector.
Right.
So technology is most important, and the manufacturing excellence to make it a real product is much more important. Otherwise, technology is stay in lab.
Jinko Solar Global Vice President Danny Tian there, speaking exclusively with our China correspondent Min Lo. Let's take a look at how we're setting up for China, and we do have some breaking news crossing the Bloomberg when it comes to the marketing of a record 5.7 billion euro sovereign bond campaign that we're seeing at the moment, and this coming at a time where, of course, we're seeing quite a bit of dislocation across the markets. China markets have been really weighed down by, of course, the broader macroeconomic weakness that we see domestically, the weakness in the consumer and the real estate markets, but still kicking off marketing when it comes to a 5.7 billion euro sovereign bond sales. It could be the largest ever such deal in euros. The finance ministry setting the initial price guidance for the 5, 8 and 12-year euro-denominated notes at 15, 22 and 33 basis points above the mid-swap rate, respectively, according to a person familiar with the matter. We could see that pricing as early as Thursday as well. We do see Beijing usually tapping the euro debt market just annually, but it is returning earlier than usual. It was just 7 months ago that it had its 4 billion euro bond issuance back in November. That attracted actually record demand exceeding 100 billion euro. China in previously has typically put pricing at euro securities between September and November. So this is perhaps outside of season, but according to Fidelity International's Lei Zhu, who's the head of Asia Fixed Income there, saying that they're seizing upon a favourable window ahead of potential inflation pressure and possibly tightening from the ECB in the second half of the year there. So keeping an eye out for potentially those implications and further developments when we get to the China Open. But that's it for the Asia trade. Our market coverage continues as we look ahead to the start of trading in Hong Kong, Shanghai and Shenzhen.